Investor, conservative to, moderate risk tolerance, what kind of allocation towards gold and gold mining stocks?
Yeah, it's hard to say. You gotta make your own, strike your own balance. I've talked in this program, I've had about half my account in gold stocks, and, obviously they've taken a huge hit in the last 6 months. So obviously I was overweighted in gold, but the foreign stocks that weren't gold related have gone down too, not quite as much. But I'm still very bullish, and I think what's happening in the foreign markets I think is a great opportunity. I think the prices that we see in many of the stocks that we follow and that we recommend are really just a temporary aberration in the market. Another analogy I thought of earlier today is if you're dying of thirst in the desert, and someone comes and offers to sell you a bottle of water, and it's the only water that's there, and you're dying of thirst, obviously you're going to pay a lot of money for that bottle of water. But under normal circumstances, if you're just, going about your business, in a city, you're not going to pay a lot of money for a bottle of water. It all depends on the circumstances. And right now, if you own stocks and you want to sell, the circumstances are that you're not going to get much money. That's just the way it is right now. If you want to sell an asset, you're not going to get much for it. But if you can wait until different circumstances, so if you happen to be in the desert and you're not the guy that's dying of thirst, then you don't have to overpay for that bottle of water. You can wait until you're out of the desert. It depends if and so that's the situation for our clients. They don't have to sell. They don't need the money right now. At least if they were straight up with me from the beginning, if they only invested long-term money and they didn't, they weren't speculating. They didn't send me money that they needed back in 6 months. If they really were long-term investors like they said they were, then the fact that our stocks are down right now is not causing any real financial damage to any of the clients. Providing that they come back up, which is I believe they will, and provided that they continue to pay their dividends, which I believe they will. And so for you, there's just, for guys that have cash, for people who have more money to invest, which, hopefully is most of the clients, it is an opportunity, I think, of a lifetime. It's an investor's dream. To be able to step up when so many people are nervous and uncertain, and so many people are getting margin calls and being forced to sell, and you're looking at prices that are just unreal. I bought some more of one of these REITs myself the other day in one of my accounts, and just look at it, the yield that they're offering is 27%, and it's like I can get 27% yield on a commercial property. Why wouldn't I buy that? And if it goes down, does it really matter to me if the price goes down? Why should I care? As long as the yield holds up, I'm going to get all my money back in 3 years anyway. Whatever I pay for the stock, I'm going to get it all back in dividends, and I'm going to free ride on it for the rest of my life. The ability to collect this kind of yield on an asset is just unbelievable. And even if for some short term, I don't know, maybe if a tenant goes bankrupt and they have to reduce the dividend for a couple of times and I don't get the full 27%, maybe I only get 10% for a couple of times, and then then they lease the property back up and I'm right back up to a 27%. Do I care? People have to really look at what's going on and look at these real opportunities and stop worrying about, oh, my God, yeah, it's 27%, but what if I buy the stock and it goes down? So what? So what if it goes down? And that's the attitude that you have to have. Now, obviously, if it's not long-term money, right, if it's money you need in 6 weeks, then, yeah, it might go down and you can't afford to buy the stock. And you shouldn't invest with money that's short-term because you're speculating. Now, you could win. There's so much volatility in this market right now. Any given day you can buy a stock and it can be 10 or 20% above what you paid for it by settlement date. And so, this is probably the best market I've ever seen for speculating if you do it right. We don't encourage people to do that, but I know people are doing it, and some people are making money and some people are getting slaughtered. But there is incredible volatility, and there's opportunities for people who want to gamble. But I think for people who don't want to gamble, if you have long-term money, it is an incredible buying opportunity all around the world.
Okay, thanks very much for your input on that.
Sure thing.
Okay.
Let me go to Steve in Ohio.
Hey, Peter. First of all, I want to thank you for what you're doing right now. I think you and Jim Rogers and Max Keys are about the only ones telling the truth these days, or at least get it and understand what's going on.
Well, there are a few other people. It's just that they don't make it onto television, or because we're not the only ones. I think certainly there are a number of people that are Austrians as far as their views on economics. I think there are a number of college professors who are not deans of the biggest business schools out there, but they're at mid-tier schools and who understand this. It's just that the people who really understand economics don't make it to government. They don't make it to the top jobs on Wall Street, and so their views don't get heard. But as I said, I'm not the only one that saw this coming. I happen to have been someone who saw it coming in the media. And so, people are saying, gee, this guy must, how can he know this? But it really wasn't that difficult. It's just that you were comparing my forecast with all the forecasts of everybody else who are basically, brain dead when it comes to economics. I mean, they've all been brainwashed at universities, and they've accepted the Keynesian myth, hook, line, and sinker. And so they're so confused. They've got so much, bad information over the years that they don't know what's going on.
Right. It's too bad Glenn Beck left headline news because I think a lot of people could stand to hear what you have to say.
Well, remember, Glenn Beck is coming back on Fox News. I mean, he's not off the air. What happened is he signed a new contract with Fox, and so when he did that, I guess CNN headline kicked him off. But he's going to come back with probably an even bigger show because I think he'll get a bigger audience, I guess, on Fox News, and he'll be on Fox News sometime coming up in early in the next year. I'm not sure if it's January or February when it's starting, but he'll be back on, and hopefully I'll be a part of his show.
Well, the sooner the better, because I think a lot of people could stand to hear what you're talking about right now. But a couple quick questions. I'm a young guy. I'm in my mid-20s, and I don't have $100,000 to invest with Euro Pacific, so I kind of had to go a different route.
Well, you don't need $100,000, but I don't know how much you had, but
Okay, it's probably around $20,000 or so.
Yeah, I mean, look, that's not a lot of money, right? You can't do that much. I mean, a lot of times it's just, you just buy yourself some gold and silver at that point, and that might be something to do. But you can certainly build a small portfolio. The problem is, with a $20,000 portfolio, you don't have as much diversification, but it's possible, and it's better than leaving the money in the dollar. But sometimes you can just put the money in gold coins and silver coins, and that's not a bad thing to do.
Well, so far what I did was I put about half of it into gold coins, and then the other half I put most of it into the Ridex Weakening Dollar Fund and a commodity ETF with wheat, corn, soy, soybean oil, coffee, and sugar. And I'm just wondering, I'm about as bearish as you are as far as, I think next year I think the dollar is probably going to drop under the table, and I think the economy is probably going to follow right along with it. If I stick with Ridex and the ETF, am I basically just going to be holding more worthless dollars if the dollar just gets annihilated?
I don't think so. I mean, I don't really follow funds, but I think if it's going to short dollars, then you're going to get more of them. So I mean, you'll have if the dollar collapses, you should theoretically have millions or billions of them. So you'll have some. But I don't know what the counterparty risks are in these types of transactions. I mean, that's the problem with some of these things where they're leveraged and they're artificial. It's because there's a counterparty to these transactions, and the question is, if the dollar really plunges, can the other party who sold the dollars to the Ridex, can they actually deliver the profits to the fund? And so you don't know. I mean, that's the problem. We went through a scare for a while. We had some of these funds that we owned in London, and fortunately they turned out okay, and there was no problem. But there were some people who were worried, and the prices dropped because their counterparty was AIG, and all of a sudden AIG was in trouble, and they questioned whether or not they could live up to their commitments, and so the funds dropped because there was a scare. So I don't know. I mean, you just never know when you're dealing with something that's been synthetically created, what the counterparty risks are. And, I think it's going to be unfortunate for some people in a lot of different things. I don't know about Ridex, but I think there's certainly going to be circumstances where people think their portfolios are insured or they have a certain investment that they've made, and the market does what they think, but they're going to lose all their money anyway because the company that was providing them with the product or the insurance just doesn't have the ability to pay.
Right. Well, and that's what I'm worried about. I've been thinking lately, if it may not just be worth it to just liquidate those holdings and just go all in with gold. I mean, I know normally you want to be diversified, but like I said, I'm pretty bearish on what's going to happen here next year and into 2000.
Yeah, as I said, and if you're still young and you're working, you obviously don't need the income. You just have a little bit of savings, and you want to keep it. I mean, you have gold and silver coins, and you can also work with the Perth Mint, get some gold out of the country.